have a wonderful 2 days training program on terms of payment in international trade. So because this particular program has been designed for exporter, so to start with, just I would like to say that if you are an exporter, you would first try to find and negotiate with the overseas buyer for export of goods. That is the first thing. So it is important not to lose potential business to competitors by overlooking different payment options which could be attracted to your international buyer. So explore several payment methods which we are going to discuss today and find which one is best suited according to your needs. To succeed in today's global marketplace and win sales against foreign competitions, exporters must offer their customers attractive sales terms supported by the appropriate payment method. So we are going to discuss today all type of terms of payment because getting paid in full and on time is the ultimate goal for each export sale. That is why we do the export. Therefore, it is very necessary first to choose a correct payment terms while we do the export business. Fine. So in trade transaction, especially cross-border transaction, export-import payment needs to be made in a secure and timely manner. When establishing a new relationship, especially when you are exporting for the first time or you are basically starting the business with a new buyer, then it is more important that you try to understand the risk involved in that transaction. So as trust develops between a buyer and seller, business may switch to other payment method like we are going to discuss. So one of the key, you can say, decision to be made when an exporter and importer negotiate a sale contract is the selection of payment terms. So as a seller or exporter, you will agree in the sales contract that, okay, you are going to supply the goods. And in turn, buyer, importer would agree to make you the payment. Now, we need to understand which are the payment terms available in international trade. So basically, you can say that the selection to which payment term is used will largely depend on a number of issues, right? But including relationship between the importer and exporter. What does it mean? It means that whether you are doing transaction for the first time, you are doing export for the first time to that particular importer or what. So if you have got a past track record, you have got good vintage, you have already done the transaction with the importer and satisfactory conduct of the account is there, then no issue. We can choose different terms and you can say terms of payment. But what terms of payment would be chosen will depend what is the relationship, whether it is a new relationship, whether it is an old existing satisfactory relationship. Another parameter could be that availability of working capital facilities to the importer and exporter. So for example, if you say to the importer that, boss, I want to do the export transaction only against the LC. You want export LC to be given to you as an exporter. But unfortunately, maybe that importer does not enjoy any of the working capital facility. Maybe LC limit is not there. So despite willingness, maybe that will not work. Okay. And this is also critical countries involved in the transaction. So we are based in India as an exporter and we are supplying the goods to different countries. So what is the country risk? That is also important. And that where the importer is based. Okay. So there could be political issue, there could be economic challenge. So depend on the country specific risk, we need to decide which Incoterms or which payment terms would be suitable for our trade transactions. Fine. So we can start with the very basic thing. Broadly, there are 4 types of terms of payment. So first, I would say that advance payment, this is very good for the exporter, extremely good. You can say that it is cash in advance. The next is basically documentary credit. You can say that letters of credit, LC, very popularly we know this. And third is basically documentary collection. and fourth is open account. So we are going to discuss these all terms of payments in detail. But before we go and understand each and every type of terms of payment in detail, we need to understand few of the things about all four, right? So here we go. This is the very brief about all. So advance payment. It means that exporter, you are paid in advance by the buyer, importer, then only you do the shipment. Very simple concept. What about documentary credit? The next one. Documentary credit, as an exporter, you are secured by issuing banks undertaking that if you submit documents under LC, according to LC, which are complying, then issuing bank gives you assurance, you can say undertaking, that you will get the payment. That is LC, documentary credit, letters of credit. The third is basically documentary collection. In this, basically, as an exporter, what you do, you ship the goods and you don't send the document directly to the importer. But what you do, you submit your export documents to your bank, and your bank, exporter bank, will forward the documents to the importer banks, and depend on the nature of the collection, whether it is documents against payment or documents against acceptance, importers bank will act according to that. And if it is a documents against payment, then payment will be made, and importer bank will remit the fund to your bank. And in case it is a documents against acceptance, means on due date, when buyer importer makes the payment, and importers bank receives the payment, they will remit the fund on due date. That is documentary collection. And the last is basically open account. Here what you do, basically, you basically not only ship the goods directly to the importer, but also you send the documents directly to the importer only. Okay, so as per sales contract, for example, you both have decided, seller and buyer, that okay, fine, I will ship you maybe 5 containers every month. You keep on doing the shipment 5 containers, and you also send the documents directly to the importer. And as per sales contract, maybe it is agreed between both of you that okay, fine, on first of succeeding month of importer will make the payment for all the 5 containers. So that could be the situation. So that is open account. Now, since briefly, broadly, we have covered all types of terms of payment, let us understand how it would be riskier for the exporter and importer. So let us understand that this diagram will give you clear indication, right? So if we talk about payment in advance payment, hardly any risk is there for the exporter, right? Why? Because exporter will ship the goods only when exporter has received the payment, right? So buyer default risk is 0. But remember, it is the highest riskier for the buyer, importer. Why? Because what if buyer makes the payment in advance, but seller does not ship the goods? Okay, so that is a very good, you can say, payment terms as far as exporter is concerned, but that is a highly riskier for the buyer, importer. If you are an exporter, definitely you would try to get advance payment as first payment terms. But what if you are not able to get that payment terms? You are not able to negotiate with the buyer. Buyer is not willing to give you the advance. Then next best course of action would be documentary credit, letters of credit, right? So here, usually, as a, you can say, you are an exporter, so issuing bank will come into the picture, who will issue the LC in favor of you, giving irrevocable undertaking that if, as a beneficiary of the LC, you are able to submit documents which are compliant, bank assures you, banks gives the undertaking that they will make you the payment, right? So after advance payment, best thing would be go for letters of credit, LC. But for any reason, maybe importer does not have any working capital facility or LC facility. Maybe he's not able to provide you, give you LC also. Then what to do? We have to do the business. then maybe we can go for documentary collection. There are also two components we have discussed, documents against payment and documents against acceptance. Best thing you can do is basically go for the documents against payment, right? So in that case, at least documents will be released to the importer only when importer makes the payment to the importing bank, and ultimately you will get the payment. But not always the case, depend on the you can say buyer's capability. Buyer may demand that, boss, give me some time to make you the payment, maybe 60 days, 90 days from the bill of lading date or invoice date. Credit is required and you are willing to do the business, and you have done the due diligence on the importer. You may agree that, okay, fine, we will ship the goods, but we will present the documents to our bank, and in turn you will receive the documents. What you do, buyer need to accept the bill of exchange, where due date will be maybe 60 days, 90 days from the bill of lading date, and buyer will be able to get the documents released after acceptance of bill of exchange or draft, and on due date, buyer makes the payment, and ultimately you get the payment. So last is basically open account. So you can see here it goes in opposite direction. So open account is very good for the buyer, but highly riskier for the seller. So as an exporter, you need to consider this, that whether you are okay with the open account transaction or not, because you take a lot of risk. You not only ship the goods directly to the importer, but also send the documents to the importer. Bank role would be hardly there, only to handling the remittance when buyer tells his bank that remit this much amount to the exporter for the goods already supplied by the exporter, right? So open account basically will come into the picture, or you should go for the open account basis only when you have got a very good, you can say vintage, or you can say relationship with the buyer, and you have got comfort that, okay, buyer is good, genuine, you have done the past transaction, there is no issue at all, you may go for open account. And for your information, in global trade, you can say cross-border transaction, export import business, out of these four, open account, basically people, majority of the transactions are done under open account basis only, because it is a very cost efficient, right? So with this background, we will understand each and every terms of payment in detail. Okay, so we will start with the very first one, that is advance payment. Fine. So advance payment. So let us understand this, how it works, and what are the risks, what is the challenges you may face in advance payment, or you can say how, uh, and what situation this will be applicable, advance payment, right? So here we go. It is simple that both exporter and so you are the exporter, okay, and you will do the sales contract with the importer. And in sales contract, lot many things will be captured. You can say not only the quantity, quality, goods description, when to ship the goods, from where to where goods needs to be shipped, whether shipment to be done by the air or by road or by shipment by sea, from which port to which port, all those things will be captured. And what are the documents you basically agree to give it to the importer. And two critical components would be there in the sales contract. First is basically delivery. As a seller, how you will deliver the goods. So for that, basically, Incoterms will be used in the sales contract. Based on the Incoterms, delivery, uh, as a seller, you need to deliver, right? Another critical component would be that which payment terms you agree in, that means buyer has to make the payment, but how? So if that buyer is a new one, or you don't trust the buyer, or you are so strong in the market that you are able to dominate the terms and condition of the contract, you may go for, boss, give me first 100% advance, then only I will ship the goods. So depend whether you will be able to negotiate such payment terms or not. So if buyer agrees to make the advance payment, then advance payment will be considered as payment terms in the sales contract. If that is the case, that okay, sales contract says that buyer need to make the advance payment. In that case, what buyer will do? Buyer will approach his bank and request for remittance. For example, you are exporting $10,000. So accordingly, As per sales contract, buyer will approach his bank for remittance of $10,000 and buyer bank will debit buyer's account in equivalent currency and they will remit $10,000, which will be ultimately received by your bank. Fine. So your bank has received the fund means ultimately you have got the credit. So once you receive the advance, then only you will do the shipment. So very much evidence that there is no buyer's default risk in that because you have already got advance payment from the buyer. Now you need to do only shipment part, right? So this is how this will work. So you do the shipment, right? And ultimately, buyer will receive the goods. Now, in advance payment terms, the buyer pays the money in advance. Once the seller is in receipt of the funds, it arranges for the goods to be shipped. We have discussed that. So payment is done by an importer to the exporter before shipment. Advance payment requires the buyer to pay the exporter before the goods have been shipped, placing all the risk on the buyer. So buyer takes a lot of risk here, right? But maybe he has already agreed to take that risk. That's why he would do the advance payment. As an exporter, you can eliminate credit risk by choosing the terms of payment, advance payment, or the risk of non-payment from foreign buyers with the advance payment method. But how far you will be able to do so, that is the question mark, right? So advance payment is the most secure method of payment for the exporter because the importer pays the full or a significant amount of the payment before the goods are shipped. So advance payment is also less burdensome than the LC, letters of credit, because letters of credit bank will get involved and we need to present the documents according to the terms and condition of the LC. That means we need to do something more, right? Apart from doing the shipment of goods. But here in case of advance payment, we do not have to worry about the bank part, fine? And there will be no buyer's default risk. However, requiring payment in advance is the least attractive option for the buyer. That is the biggest challenge. Okay, so whether you will be able to get advance payment, you can say as a terms of payment in sales contract, that we need to consider. Depending on the sales opportunity, an exporter may also need to consider the other terms of payment. Why? Because it is a very competitive market. If the importer gets other payment terms and we are insisting for advance payment, maybe it will not work. So foreign buyers are also concerned that what if advance payment has been made, but goods are not shipped by the exporter? That is the biggest risk any of the, you can say, importer will face. And challenge is in cross-border transaction, usually both will be located in different country, right? So maybe you are doing the shipment from India to South Africa. So far distance is there, different language, you can say different countries, different culture, and moreover, different laws are there, right? So importer who is based in South Africa may think that today if I have remitted the fund $10,000 and what if exporter does not do the shipment at all? So that is the biggest risk we carry as far as advance payment is concerned from the buyer side. So thus exporters who insist on this payment method as their sole manner of doing business may lose to competition who offer more attractive payment terms. So depends. I mean, a buyer would say that I'm getting different payment terms, which is more favorable to me. Why should I start a relationship with you? In India only, maybe other exporters are there who are not insisting for advance payment. So maybe we are going for the advance payment because we think that, okay, this will eliminate the buyer's default risk of payment. But whether we will be able to get this payment terms or not, that is the question mark, right? Advance payment is recommended in high risk trade relationship or you can say export markets, particularly for small export transactions for which other payment methods may not be cost effective. So if you think that boss, it is very riskier one to export without getting the advance, definitely you can insist, you can negotiate with the buyer that no, we want advance, then only we will do the shipment, especially when you are exporting specific to one client, customized product, then it will be more challenging, right? Because if you start manufacturing that particular product and if that guy doesn't take that product, then what to do with the product which is meant for very specific customer, right? So depend on the nature of the commodity, country, buyer position. We need to take a call how we need to position ourselves to get advance payment as one of the terms and condition, right? Advance payments are common with low value orders, such as when purchasing from online retailers, etc. Why? Because maybe if amount is big, for example, then maybe that guy, importer, will not be willing to take that much of risk. But if a small amount is involved, then maybe that buyer would be considering that, okay, fine, this risk I can take, let me start the relationship with the exporter. That guy may be willing to give you the advance at the beginning. Later on, when comfort will develop, then we can switch over to other payment method also. So it is the basically when you go for this type of transaction, the beginning you can say, or when you are in the commanding position, your products is so specific that definitely buyer would like to get the product from you. There is no choice available to him. Maybe we can dominate and we can get this payment terms if you are able to get advance payment, nothing like that. Okay, this is one of the best thing we can do for our export. You can say default risk is not there because we will do the shipment as an exporter only when we receive the payment. So this is very simple, you can say payment terms, that is advance payment. But the challenge is whether we are able to get this payment terms or not. Okay. So for exporter, obviously most safest from the exporter's point of view, receiving payments in advance for the shipment is an ideal situation, as it will eliminate all risk associated with non-payment by the buyer, right? For a seller, advance payment is the least risky payment method. It provides a seller with upfront working capital to produce and ship the goods, as well as security, since there is no risk of late or non-payment. Okay, you get the payment, then you can maybe manufacture, then you can procure the goods, you can do whatever you want to do with that money, which you have already got against the export order. But what about the importer? Highly riskier one, most riskier. From the importer's point of view, advance payment carries the highest risk, as it is wholly dependent on the exporter shipping the correct goods in accordance with the sales contract, and it increases the buyer's financial risk exposure to the seller. In addition, payment in advance can create cash flow problem for the importer, because importer need to deploy their fund upfront, right? Today only they need to make the remittance, but when the goods will be received, there will be gap. So it has to wait to receive the goods. This method can be problematic if the delivered goods are not up to standard or faulty or not delivered on time, or maybe in worst case scenario, no shipment is done by the seller even after receipt of advance payment. Okay, so pro and cons both we have discussed about the advance payment. Now, as an exporter, what if we are not able to get advance payment? What should we do? Definitely, we can go for documentary credit. Okay, that is nothing but letters of credit, LC. But technically, official name is basically documentary credit, but very properly, you can say uh, uh, we call it letters of credit, LC. Commonly, it is known as LC, right? So we need to understand what exactly LC is, how it is good for us. If we are not able to get advance payment, then we can go for LC. So again, in the sales contract, we need to incorporate payment terms as LC, isn't it? So we need to understand first what is LC. In nutshell, I can tell you that LC is an irrevocable undertaking given by the issuing bank to the beneficiary to honor a complying presentation. That is the official, but technical one. So I will make you understand in a very simple manner. So you can say LC is an instrument. You can say it is irrevocable undertaking given by the buyer's bank. Buyer's bank, when they issue the LC, they will become issuing bank. And that LC will be issued, that irrevocable undertaking will be issued in favor of the beneficiary. Who will be the beneficiary? Seller exporter, right? what will be the undertaking? Undertaking will be that if beneficiary presents documents according to terms and condition of the LC, then issuing bank will make the payment, right? So you can say that LC mitigates the risk of buyer's default. Fine. So LC is an irrevocable undertaking given by the issuing bank to the beneficiary, means seller or exporter, to honor a compliant presentation. When we say irrevocable undertaking means what? What is the meaning of irrevocable? It means that once LC is issued, it cannot be cancelled, it cannot be amended without the consent of beneficiary. Nutshell. Okay. So for example, you have got the LC for $50,000 to supply something by maybe 30th June. So you are very happy that, okay, boss, we have got the LC for 50,000. Now, what if tomorrow, when you are planning to do the shipment, suddenly you find that there is an amendment? That's why this provision is there. Amendment for reduction of the amount or amendment for cancellation, whatever, that is not possible because LC is irrevocable. Means even if there is an amendment, any change in the existing terms and condition will not be effective unless and until you as a beneficiary give your consent. We are okay, amount to be reduced from 50,000 to 25,000. Without your consent, for you, original LC amount 50,000 will remain in force even if amendment has been done by the issuing bank, because the nature of the LC is irrevocable. Means it cannot be, once issued, it cannot be cancelled or amended without the consent of beneficiary, right? Now, that undertaking is given by the bank, issuing bank. You can see nowhere it is mentioned that this undertaking has got anything with the buyer. Nothing is mentioned about the buyer. Means as an exporter, as the beneficiary of the LC, we are least bothered about the financial position of the buyer. If you have got the LC, then buyer is out of the picture. In fact, I can tell you buyer as an applicant of the LC is not a party to LC. So LC will be issued by the bank in favor of the beneficiary. And what will be the undertaking given by the issuing bank? To honor a compliant presentation. That means we need to do this. We need to do something to get the payment from the issuing bank. What we need to do? We need to present documents which are complying one, right? If you are able to do so, we are assured about the payment that we will get the payment from the issuing bank. We do not have to worry whether there is sufficient balance available in the buyer's account or not, right? It is not our look after because LC mitigates the buyer's default risk. Fine. So nutshell, you can say that, in other words, LC is basically an undertaking given by the buyer's bank, means issuing bank, to the seller that if seller submits the required documents accordance with the terms and condition of the LC, the applicable provisions of the UCP 600 rules and international standard banking practice, then seller will receive the payment. Nobody can stop. Okay. But the only thing we need to understand that when we receive the LC, we need to work or we need to submit the documents which are complying one. Then only our payment is assured by the issuing bank, right? We do not have to worry about the applicant's standing. What is the balance available in the applicant's account? So issuing banks, this understanding is irrespective of whether importer has sufficient fund in the account or not. We are not bothered. It is the look after of the issuing bank, how they will be able to recover the money or amount from the applicant buyer. It is their look after. We will get the payment if we are able to submit documents which are compliant. Okay. So it is between issuing bank and applicant of the LC, means buyer, whether buyer is able to give fund payment to the issuing bank or not, but definitely we will get the payment from issuing bank under LC, right? So LC is governed under UCPDC 600, right? So always we need to have some amount of understanding about UCP 600 because LC will be slightly critical. So what we are going to do today, since this is very specific session for understanding each and everything about various payment terms. So advance payment we have discussed, there is not much to devote time, but here definitely we need to spend more time to understand each and every aspect of LC. What are the things we need to do when we receive the LC? What are the precaution we need to take? What is the risk for us as a, you can say, beneficiary of the LC? And what are the precaution we need to take while we go for LC transaction, right? So we will try to understand each and everything today itself, right? So you can say, so exporter will be, exporter means beneficiary of the LC will be assured that once shipment is done and documents as per LC terms and conditions are presented to the bank, his payment is assured by the issuing bank. Fine. So we are no longer dependent on the buyer. Okay. So if you are exploring or export transaction for the first time, okay, you are not able to get the advance payment for any reason, right? You may go for LC. At that time, maybe buyer's financial is not so good. Doesn't make any difference if you are able to get LC from a bank which is reputed one. Okay, maybe that buyer is banking or has LC limit with bank and a bank has agreed to issue the LC in favor of you as an exporter, beneficiary of the LC, then we are done. I mean, we do not have to worry whether buyer will make the payment or not, right? So importer, buyer also gets the comfort under LC that he has to pay for the goods only when goods are shipped and documents as per LC terms are received by his bank, that is issuing bank. Now, understand that in sales contract, why buyer will agree for LCS payment terms? Because in case of advance payment, that is more riskier for the buyer. Maybe he will be okay, buyer will be okay, importer will be okay that, okay, I am done with the LC transaction because I know I have to make the payment to the issuing bank only when goods have been shipped and documents have been received by my bank. Okay. So that is why maybe importer would agree to go ahead, agree for LC as terms of payment. Now, this is critical. So we have discussed the issuing bank will issue the LC, right? But is it only the bank who are allowed to issue LC? That is not the case. We need to understand this very clearly. Although it is a bank that will usually issue a LC, any company or individual may also act in the capacity of the issuer. What does it mean? Most of the time, we will think that only banks are allowed to issue LC subject to UCP 600, but that is not the fact. In fact, non-banking entity also may issue LC, which are subject to UCP 600. So you were expecting an one LC, right? So you as an exporter, definitely you will float your, I mean, you will sell your product using internet and everything. So not many people will have that data. Okay. So overseas buyer may have the data. Okay. Now, if we receive the LC, so many of the time, if we are not very familiar with the structure of the LC, we will think that, okay, fine, we have got the LC. But who has issued the LC? That is also to be looked into. Because many of the time, it will be 100% people will think that LC means it is issued by bank. But these days, it is observed that non-banking entity, LC is there, but it is not issued by bank. That is the challenge, right? So how would you know? That is the question. Bank has issued the LC, you will have more comfort on the bank, isn't it? That, okay, bank has issued, so bank will definitely make the payment. But what if the issuer is not the bank? Then how far you will take a comfort derived on the LC, which is issued by non-banking entity, right? So beneficiary is advised to seek the advice of his bankers on the suitability of the issuer of a LC, because there may be various risks that require consideration, like availability of foreign exchange, political risk, creditworthiness of the issuer, etc., that may impact any payment due to that beneficiary. So if you have got any challenge, any doubt about who has issued the LC, better to ask your banker. Please check this. Okay, so banker would be able to tell you whether you should rely on the issuer or not, right? So whatever question query you have, definitely at the end, I will give you the time to raise the query. Every query will be sorted out. If you go through today's session, most of the doubt, whatever you have, will get clarified, right? So few of the things I want to highlight here. Please note that LC is not a contract between the buyer and seller. So as an exporter, what you have done the export contract, sales contract with the importer. So in that sales contract, LC has been agreed as payment terms. So based on the sales contract, buyer will approach his bank, fill up the LC application form and request for LC issuance. And based if limit is sanctioned by the bank, issuing bank will issue the LC in favor of you, right? You are the beneficiary of the LC. Remember, once LC is issued, it is independent from the sales contract. You will get the payment if you are able to fulfill the terms and condition of the LC, not the sales contract, because LC is separate and independent from the sales contract, right? Yes, most of the terms and condition of the LC will be based on the sales contract only, but once LC is issued, it is no longer dependent on the sales contract. Sales contract is between exporter and importer. Bank doesn't come into play in that case, right? But LC is between issuing bank and beneficiary, exporter. Applicant is not a party to LC. That means what? If you are able to submit documents according to LC, your role is over, you will get the payment. For example, in the sales contract, you had agreed to submit 5 documents. You had agreed that, boss, I will give you commercial invoice, bill of lading, packing list, certificate of origin, and inspection certificate also I will provide. This has been captured in the sales contract. Okay. And terms of payment is LC. So what importer need to do? Importer will go to his bank and fill up the LC application form. But while filling the LC application form, applicant, buyer, forget to mention about the inspection certificate. He filled up only 4 documents, maybe commercial invoice, bill of lading, packing list, certificate of origin. And applicant forgot to mention about the requirement under LC, that inspection certificate, which was agreed by the exporter in the sales contract. Now, issuing bank will issue LC based on the LC application request letter made by the buyer, right? So LC has been issued, 4 documents had been requested by the applicant. So only 4 documents have been stipulated in the LC. So as an exporter, you have got LC where you find you do not have to submit inspection certificate. Only 4 documents you need to submit. And you have submitted all the 4 documents. Documents are complying. You will get the payment. Now, those documents, when handed over by the issuing bank to the buyer will find that, boss, where is the inspection certificate? Issuing bank will say that was not stipulated. Buyer will say, no, it was stipulated in the sales contract. Why did you honor? Why did you make the payment? Bank will say, documents were as per LC terms and conditions. That's why we have honored. So remember this, LC is not a contract between buyer and seller. Any dispute with respect to the sales contract is to be taken care outside the scope of UCP 600, outside the scope of LC, right? The next thing is that LC is not a guarantee that seller, exporter will definitely receive the payment. Okay, it is not a guarantee. that definitely as an exporter, you will get the payment, 100% sure. No. Why? Because it is a conditional undertaking, you can say. The condition is, if as a beneficiary of the LC, you are able to present documents which are complying, then only issuing bank will make you the payment, right? So it is a conditional undertaking. For any reason, we have not been able to present documents. Maybe we had submitted the document, but there are discrepancies. Then what will happen that we need to be at the mercy of the buyer, because issuing bank will raise the discrepancies, will advise the discrepancies to the applicant for waiver of the discrepancies. If applicant buyer waives the discrepancies, then only issuing bank may agree that, okay, fine, we will make you the payment. That means we need to be dependent on the buyer for that. Okay. And in very worst case scenario, it is possible that issuing bank may simply return the document. Now, goods have been shipped. It has already reached to Port Durban, South Africa, under LC transaction. But maybe one or two, three, four, whatever discrepancies were there. That's why issuing bank in South Africa has returned back the documents. What to do with the documents? Title to goods are there in our hand now, but goods are already there at Port Durban. So these type of situation may be there. So we need to understand this reality also. And one more thing is that LC is not a guarantee that the buyer will receive the goods that it has ordered. This is meant for buyer, because issuing bank will simply make the payment to the seller, means beneficiary, once documents are complying as per LC terms and condition, everything is there. Then issuing bank will simply make the payment and release the documents to the buyer. Now, once buyer receives the document from the issuing bank, and later on when goods are received, any, you can say that quantity issue, quality issue, whatever issues are there with the goods, if buyer feels that it is not as per the sales contract, buyer cannot do anything. Okay. Buyer, if goes to the bank, that boss, why did you make the payment to the seller? Because we have not received the goods in the same quantity. Documents indicates that it is a 100 metric ton, but we have received only, you can say 80 metric ton, or documents suggest that it is of so its standard, but we have got the inferior quality of the goods. So exporter has not done his part properly. We should not make the payment. Issuing bank will say documents are complying, therefore we have to make the payment, and we have done that. Now, any dispute related to goods, bank is no longer involved in that. So buyer need to basically, buyer cannot do in this transaction, right? So understand this. It is not a guarantee for the buyer that buyer will definitely receive the goods that it has ordered. So with this background, let us go and understand few more concepts. Okay, who are the parties to LC? Obviously, we are discussing applicant. Applicant means a buyer importer is the party on whose request LC is issued. Applicant is usually the buyer of the goods who requests the issuing bank to issue LC on its behalf in favor of the seller, exporter, and that will be called as beneficiary of the LC. Then issuing bank obviously will issue the LC who at the buyer's request, applicant's request, and issuing bank gives irrevocable undertaking to pay the beneficiary upon receipt of compliant documents, right? Beneficiary, you are the beneficiary, you are the exporter, so you are the party in whose favor LC will be issued by issuing bank, okay? And advising bank. So understand this is a cross-border transaction, export-import business. So if bank in South Africa has issued the LC, how that LC will reach to you in India? They need to take services for any bank located in India, isn't it? So there would be role of advising bank who will receive the LC transmitted MT 700 SWIFT message from the South African bank. This advising bank could be correspondent bank of the issuing bank based in India. So that bank will become advising bank, and that bank will advise the LC to you, means beneficiary. Fine. Confirming bank, this is something we need to understand the concept that you are not okay. You have received or you are discussing with the buyer, right? So buyer has agreed that we will give you the LC. Then you will ask, LC fine, but LC will be issued by which bank? And buyer says that bank A. Bank A, where we are having LC limit, will issue LC in favor of you. Now you know you have got the information that you will get LC for example, 50,000 from bank A. Now you do not know the credit standing of bank A, right? Country is South Africa. So maybe you can ask your banker, your present banker with whom you are banking, okay, and ask what is the credit standing of bank A, whether you can accept the LC issued by bank A, whether it is a good bank to believe or trust. For any reason, you find no, credit rating of bank A is not so good. That means what? You are not very much assured that today, if you do the shipment, presents the documents, and in between something goes wrong with bank A, maybe that bank has become insolvent. Then what to do? How to get the payment? Goods have been shipped under LC, but you will not be able to get the payment. So what is the best choice available to you as an exporter? How you can protect yourself against this type of risk? Or maybe that country is facing some challenges. Maybe you are planning to do the shipment, for example, Sri Lanka. If there you find that some, you can say, foreign exchange related challenges there. Maybe Sri Lankan central bank has put a condition that beyond $10,000, nothing can be remitted outside Sri Lanka. So despite willingness of issuing bank to remit the fund, they will not be able to remit the fund because of restriction put by their own central bank. So we need to understand these risks are there, not only the bank risk, but where that bank, issuing bank, is located. How is the economic situation? How is the political situation of that country? Because ultimately, we have shipped the goods, we are entitled to get the payment. But how to ensure that we definitely would get the payment? And that is why we are discussing all those things, right? So if that is the situation, you find that, boss, there is a challenge with the bank A, and country specific risk is also there. So what you can do as an exporter, you can say that I want that LC to be confirmed by my local bank. So any Indian bank, maybe nationalized bank or any of the private bank with whom you are comfortable with, may come into the picture, and you can get that LC confirmed. Okay. So maybe any Indian bank can confirm it. Definitely before doing the confirmation, Indian, whoever is the bank, whether it is private or foreign, or you can say nationalized bank, they will definitely have their own due diligence on the issuing bank, or you can say country specific risk they will see, and they will even see what are the terms and conditions of the LC before they do uh, confirmation on that particular LC. Why this is we are discussing? Because once confirmation has been added by confirming bank, they give their own irrevocable undertaking to the beneficiary to honor or negotiate a compliant presentation, right? That means as a beneficiary, as an exporter, if you have received confirmed LC, you have got assurance undertaking of two banks. Definitely one under LC, you have got from the issuing bank that if you submit the documents, they will make the payment. But yeah, now you do not have to worry about the issuing bank because confirming bank has come into the picture. Now they say that if you present the document which are compliant, they will make you the payment. So your risk, which was on the issuing bank, is shifted to the local bank. Maybe that bank is any bank, nationalized bank, private bank. Okay, so you submit the document to Indian bank, who is the confirming bank, and you get the payment. So you do not have to worry what is happening abroad. That country is facing some challenges. Nothing to be. You will get the payment locally, right? If that bank is basically confirming bank is your no own local Indian bank here, right? So that is a very good tool, but the only thing that confirming bank will charge. Okay, they will have their own charges. So we need to always decide what is good for you. Maybe that importer will say, why should I bear your country's confirming bank charges? So importer may agree, may not agree. So if you think that, boss, bank A, who is the issuing bank, we are not very comfortable with that bank, or where the that country position is not good, we can go for the risk mitigation mechanism, go for the confirming bank, and maybe we will have to bear the confirming bank charges also. So that is good, I mean. So if you are mitigating you are getting the payment without any tension from the local bank, maybe we can uh, pay some price for that as confirming bank charges, right? So confirming bank. Nominated bank is the bank with which LC is available, or any bank in the case of it is available with any bank. What does it mean? It means where you need to present the document. So you have got the LC, right? So it is an export LC. So South Africa country's bank has issued the LC. Obviously, you can directly forward the document to the issuing bank based in South Africa and get the payment. But that will be a very riskier job for you, isn't it? So whether that bank has received the document or not, within the LC expiry date, within the presentation period, so many issues could be there. So it is most of the LC will have like this, that okay, one nominated bank will be there in the country of the beneficiary. For example, in India, for India, maybe one bank name would be there, that okay, State Bank of India or ICICI Bank or Kotak Mahindra Bank, Mumbai branch. That bank will be LC is available with, for example, State Bank of India, Mumbai. That means State Bank of India Mumbai branch is the nominated bank where, as a beneficiary, as an exporter, we can present the document. That's all. Okay. And that nominated bank will in turn forward the document to the issuing bank, right? So that is how. Many of the time we can get the LC, that LC available with any bank. That means bank name would not be there. So it will be mentioned any bank. That means we can present the document to any bank in India, maybe Mumbai, Chennai, maybe at Kolkata, or maybe Delhi, any bank, whoever is willing to handle the transaction, right? So that is how this entire thing works. Okay. Reimbursing bank, we did not have to worry because it is bank to bank thing. So bank, issuing bank, how they will make the payment, it is related to that. It is possible that in the LC itself, they would say that nominated bank where we have deposited or submitted the documents can claim the amount from a third bank. So what issuing bank will do? They will fund with the reimbursing bank, and your bank, maybe your bank is the nominated bank. So you have presented the document to your bank only. So your bank can claim the amount from that third bank directly, and they can forward documents directly to the issuing bank, right? So these are the parties engaged in LC transaction. Remember, technically, applicant is not a party to LC, right? So this is the flow chart of LC, whatever we have discussed. Just if you want, obviously, in sales contract, exporter and importer both will agree that LC is payment terms, right? If that is the case, applicant, importer will approach his bank for issuance of LC. How approach will be done? Applicant will fill up LC application form. See, if issuing bank has already sanctioned them LC limit and this LC application form is in order, what they will do? They will issue LC in favor of the exporter beneficiary, right? So LC will be advised, transmitted by the issuing bank. Let us assume that this bank is based in South Africa, right? So they will send SWIFT message MT700 to nominated bank in India. So we can take ABC Bank in India is the nominated bank. Okay. So ABC Bank has received MT700 LC from issuing bank. Then what this bank will do? They will advise the LC to you. Now you have received the LC. So what you are supposed to do once you receive the LC, read each and every word of the LC carefully and see whatever you had agreed in the sales contract, whatever terms and condition you had okayed in the terms sales contract, all those terms and conditions have been properly captured in the LC terms and condition or not, right? For example, you had agreed in the sales contract that boss, I will do the shipment by 25th September. Suddenly you find in LC, it is mentioned that latest date of shipment is 15th August. Whether it is possible for you to do the shipment by 15th August, just check it. Or maybe you had agreed to give only 4 documents in the sales contract. Suddenly you find in LC, you are supposed to give 5 documents. That 5th document, whether you will be able to provide or not. So check that. So if you are not comfortable with the any of the existing terms and condition of the LC, what you can do, you can approach the applicant directly and say, get this LC amended, remove these terms. We had not agreed in the sales contract. So in that case, applicant would approach his bank for amendment. And you should not do the shipment till the time you get the amendment, right? So for example, you had agreed in the sales contract 4 documents. LC says 5 documents to be given. You are not comfortable whether you will be able to provide 5th documents or not. So you had requested the applicant importer to get the LC amended. You should not do the shipment unless you have got the amendment done, that instead of 5, only 4 documents you need to submit as a beneficiary, right? Because without amendment, if you do the shipment, then it will be very difficult. Later on, maybe applicant will not cooperate. Then what will happen? 5th document will become a challenge for you. And if you are not able to submit the 5th documents will not be complying, and maybe payment will be delayed. You will be at the mercy of the importer, right? So once you have received the LC, what you do, read carefully, you do the shipment and present the document to the nominated bank. The nominated bank will forward the document to the issuing bank. So when the issuing bank receives the document, they will definitely scrutiny, they will examine the document. And if documents are okay, complying, what they will do, they will make the payment to you, make the payment to the nominated bank who has forwarded the document, and documents will be delivered, handed over to the applicant, right? So now payment has been received by the presenter, nominated bank, and in turn, it will be given to you. This is the typical transaction flow of LC, right? So whatever we have discussed, if we really want to understand one by one, so we can have it here. So just here in this previous case, we had taken exporter here, importer here, just opposite, so that clarity would be there, right? So here exporter is based here, importer is based here, right? So they will have definitely contract. In that contract, LC will be one of the terms and condition. If that is the case, importer will approach his bank. So we have assumed one bank, local bank. So we have taken the example of Bank of Baroda, maybe this importer. So I'm giving you the opposite picture, right? So now importer is based in India, right? So that's why. Okay, so importer will approach his bank. We have taken local bank so that you can understand the transaction in a different manner also. Okay, so Bank of India, Bank of Baroda is the issuing bank. Fine. So basically request the local bank where they are having LC limit to issue LC, and LC will be issued by issuing bank. It will be remitted to transmitted to advising bank, and advising bank ultimately you will give it to the exporter. Now exporter has received the LC, right? What they will do, they will do the shipment, and carrier will release the bill of lading. I mean, issue the bill of lading, which exporter will receive. Exporter will collect all the other documents apart from bill of lading, maybe commercial invoice, maybe packing list, certificate of origin, and other documents as per LC. And what exporter will do, they will present the document to the nominated bank, negotiating bank. Okay, so this bank will basically forward the document. It is possible that nominated bank may straightforward pay. That is possible, but they are not mandatory, right? So if this bank is a confirming bank, then that exporter will get the payment once documents are presented and documents are complying one. But the nominated bank is not obligated. They may pay, they may not pay. They may decide that, boss, we will not make you the payment. What we will do, we will simply forward the document to the issuing bank. Okay. So once documents are received by issuing bank, what they will do, they will examine the document. If documents are okay, then they will make the payment. At that time, nominated bank will get the payment, and ultimately you will get the payment, not at the first time. So both the things are possible, right? Once payment has been done by issuing bank, what they will do, they will release the documents to the importer, and based on that, importer will be able to take the goods released from the carrier at the port of discharge, right? So this is how this mechanism works. There could be situation that this confirming bank may be there, and there could be possibility that reimbursing bank would be there, right? So if you really want to understand parties, first applicant. So applicant usually should be the customer of the bank, obviously, because LC limit and all those things will be sanctioned by the issuing bank to them. So KYC, IEC verification would be done by the issuing bank, and their credit team will decide how much limit is required based on the working capital. Importability of the item, licensing requirement as per FEMA ITC has been complied or not, whether uh, these days most of the items are basically uh, open. Okay, so LC limit will be sanctioned, and in case there is no LC limit, and despite that importer wants to get the LC issued, so bank wise different policies are there in India. If LC is being issued in US dollar, usually most of the bank would try to keep 110% rupees equivalent in the fixed deposit, but it could be up to 125% if tenure of the LC is more than 1 year, depend on the bank's internal policy if LC limit is not sanctioned, right? So opinion report on the supplier. Supplier means beneficiary. Many of the bank will insist that before we issue the LC, we need to take credit opinion on the supplier. Okay, so that could be the possibility. And obviously, for that LC issuance, applicant need to submit LC application form to the issuing bank. Once that is received, issuing bank has received the LC application form, then they will issue the LC, means they give irrevocable undertaking to make the payment to the beneficiary against complying presentation. And we need to understand that always there is a, you can say that LC deals only with the document. Banks deal only with the documents, not with the goods. I was giving you the example that tomorrow if importer does not get the goods as per quality or quantity as per the sales contract, if dispute is there, that dispute need to be sorted out within the scope of sales contract, not under LC. If documents are complying, issuing bank will simply pay, because bank will say banks deal only with the documents, not with the goods. That is the challenge. Okay. Obviously, issuing bank need to guide importer how they can protect in this regard. Maybe if goods need to be inspected, in that case, maybe issuing bank may say to the customer, importer, that you can stipulate inspection certificate, right? So, but that need to be accepted by the seller also. That we need to take care. And usually in LC, terms should be very clear without any ambiguity, so that seller, ultimately, what is the purpose of LC? LC purpose is to ensure that once documents are presented, sellers should get the payment, right? That is why bank gives this undertaking, right? So if for any reason terms and conditions are not clear, then maybe it will create problem later on. Seller will say that I interpreted that terms and condition like this. Now issuing bank is saying that no, the meaning of this line was this. So that should not be the case of dispute related to that. And obviously, once documents are received, issuing bank will examine the document within maximum 5 banking days after the date of presentation. If documents are complying, they will make the payment. If documents are discrepant, what they will do? They will simply say, we are refusing, and they will approach the applicant, that applicant waives the discrepancies or not. So most of the cases, if applicant waives the discrepancies, we are okay with the discrepancies, issuing bank will also agree with the discrepancies, that they will honor it, right? So advising bank who has received the LC from the issuing bank, what they will do? They will advise the LC to the beneficiary. They are responsible for two things, that LC is genuine. Okay, this is the responsibility of the advising bank, that apparent authenticity of the LC, they have satisfied that, and each and every word of the LC which they had received has been communicated to the beneficiary. These are the two things advising bank will do. Okay. Now come to the confirming bank. So we had discussed that confirming bank gives their own irrevocable undertaking when they confirm the LC, right? So once they add the confirmation, means they give their own definite undertaking to honor or negotiate a complying presentation. And this undertaking, which is given by confirming bank, is in addition to the undertaking already given by the issuing bank to the beneficiary. So beneficiary, in case of confirmed LC, has got two undertaking from the two different banks. One obviously under LC issuing bank, and now confirmation has been added, means beneficiary has got another undertaking from confirming bank, that if documents are presented to the confirming bank, they will honor. Okay. So the same type of work, or you can say responsibility, is there. Okay. So how confirming bank takes a call? They take credit exposure on the issuing bank. Remember, as a beneficiary, if you present the document to confirming bank, definitely they need to make the payment if documents are compliant. But how the confirming bank will be able to get the payment from the issuing bank? What if tomorrow issuing bank fails to give payment to the confirming bank? That risk confirming bank carries. We do not have to worry about that. Okay. So they reserve the right not to add the confirmation on any amendment. Maybe that initial LC was $50,000. Now LC has been enhanced to $100,000. So initial LC 50,000 will be confirmed. But if they are not willing to take additional exposure, they may say that additional 50,000 when LC is amended from 50,000 to $100,000. They are not comfortable. We will not add the confirmation. Now you have got two situations. You have got original LC for 50,000 and amendment of 50,000. Now total value of the LC has become 100,000. Now part of that means up to 50,000 it is confirmed and amended part is not confirmed. So you need to decide, you need to always be alert. Up to 50,000 original LC amount which has been confirmed, up to that amount, if you present the document to confirming bank, they must honor. They do not have any choice. You will get the payment if documents are compliant. But for the rest which has not been confirmed, if you present, maybe partial shipment is allowed. You do 50,000 one shipment you have done, you have utilized the LC. Now amendment amount part you have done the shipment and you present the document to the confirming bank. Considering that, they will definitely honor. Remember that amendment is not confirmed, right? Amendment amount. So when you present the document, even if documents are compliant, they are not obligated. Okay. If they do so, absolutely fine, but they are not obligated that they must honor or negotiate. They can simply forward the document to the issuing bank. Once they get the payment from the issuing bank, then only as an exporter, you will get the payment. So this type of things, when you deal with the LC, need to be careful while you agree LC as payment terms. And obviously they will, confirming bank will also have maximum of 5 banking days for scrutiny of the document. Okay. And if documents are complying, they must honor, they do not have any choice. And if discrepancies are there, they will give refusal notice, right? So negotiating bank could be where the presentation you need to make. Please remember, many of the time advising bank, nominated bank, confirming bank, all three could be only one bank. Okay. Same bank can act as an advising bank. They have advised the LC. LC is available with the very same bank, and the same bank has added the confirmation, means they have become now confirming bank. So all three role will be played by one bank, but it is possible that it may be three different bank also. Okay, but very rarely it happens. Usually it happens that okay, advising bank and you can say a nominated bank would be the same, but not necessary, right? Depend. So no, LC available with nominated bank where you are supposed to present the document, right? So I have already told that they are not obligated like confirming bank or issuing bank to honor. Okay, so they may honor, they may not honor. What they can do, they can simply forward the document. If they decide that no, boss, maybe you are banking with the nominated bank, for example. So you have got very good conduct of the account with the bank. So bank will be happy to assist you, right? Maybe you are maintaining good float with the bank, or you have already got working capital facility with the nominated bank. You are enjoying CCOD, whatever terms, term loan, etc., right? So they know you. So they may go ahead that, okay, fine, we are okay. We will do the negotiation. Means once compliant presentation has been made to them, they will give you the money upfront and they will get the reimbursement from the issuing bank later on. That is quite possible, but they are not technically obligated. They may do so, they may not do so, right? And if they decide that we will do, then definitely they need to examine and see documents are complying or not, and time limit will be the same, maximum of 5 banking days. And since you are interacting firsthand to the bank, isn't it? So you will not be able to discuss anything with the issuing bank directly, okay? Because you will get LC through the advising bank, right? But you can definitely discuss with the person who is sitting in the counter of, you can say, nominated bank. So if any challenge is there in the documents piece, definitely you can have a discussion, get the documents rectified. Okay, so that is quite possible. Many of the bank will have this facility. They will see the documents. They will scrutinize the documents upfront. I mean, RM will tell you that, boss, you change the invoice because this word is not correct. This is the discrepancies. Whatever documents can be changed, definitely they will. You can do this. Many of the bank give this facility, right? So. Obviously, as an exporter, what is your role? So you have received the LC, you have done the shipment. Now you need to get the payment, isn't it? For your shipment, only one thing you need to do: submit the document as per LC terms and condition. Okay, to make a compliant presentation to get the payment under LC, right? So this is the total. We have discussed each and every parties of the LC, right? Now, coming to the point of really LC is beneficial for you as an exporter, that we need to understand, right? So yes, we have discussed that if you are not able to get the advance payment as one of the payment terms, maybe you can go for the next, you can say, a type of terms of payment, that is LC for this. How this is beneficial? Default risk of the buyer shifts to the issuing bank. Understand this. If the beneficiary, you fulfill the LC terms and condition, the importer cannot halt or otherwise hold the payment back. Any claim dispute regarding the goods, means goods are not as per the sales order, or you can say sales contract, or goods are of inferior quality, and all those things need to be resolved outside the LC. As a beneficiary, definitely, if documents are complying, means you are definitely going to get the payment from the issuing bank. Okay. So if importer changes or cancel the order, so it is quite possible that importer would say that I'm going to cancel the order. What to do now? Or importer wants to change certain portion of the sales contract. What to do now? But once LC is issued, we have already discussed that it cannot be amended or cancelled without your consent as a beneficiary of the LC. Okay, so this is very good. So it gives you a lot of protection. Okay, so if importer changes or cancels an order, for example, LC ensures that exporter will still get paid by the buyer's bank. Okay, so this is important for the shipped goods if uh, stipulated documents are presented to under LC. So LC is also a safeguard against situation where buyer refuses to pay for the goods for any reason. There could be dispute, so many reasons. Okay, or a buyer goes bankrupt. Boss, I do not have money. My godown has got a fire, so nothing is left now. I cannot make the payment. But under LC, it is not the applicant or buyer who is responsible to make the payment, but the issuing bank. So LC mitigates the risk of the payment delay or non-payment due to various factors such as political instability or insolvency of the buyer, right? The next benefit is irrevocable nature of the LC. So I have jotted down here, LC cannot be cancelled or amended without beneficiary agreement or consent, since by definition it is irrevocable, right? So once it is issued, any change in LC will require your consent. Reduction in amount, change in shipment date, whatever, change in documents, anything, any change, amendment would require your consent as a beneficiary. Otherwise, it cannot be changed once LC is issued. The next is it eliminates issuing banks and importing country political risk via confirmation. So if you perceive that, boss, somehow issuing bank is not of good repute, or the country where you are exporting has got some political challenge, economic challenge, what you can do, you can ask that LC to be confirmed by local bank, Indian bank. Okay, in that case, exporters obtains an irrevocable undertaking to receive payment not only from the issuing bank but separately from the local confirming bank. So that way you will be more safe. Okay, payment working capital possibilities. So confirming bank or nominated bank, which we had seen that they can, once you present the document, will pay you. Okay, so working capital will definitely improve. And many of the time, what will happen when you present the document to nominated bank, most of the bank in India, what they will do, they will not give you the money upfront. For example, you have got export LC, right? And this is a usance LC, means payment to be received after 90 days from the bill of lading. you have submitted the document. What your bank will do, your bank will forward the document to the issuing bank, and once issuing bank sends their acceptance message, for example, due date is 25th September. If that acceptance message has been received by your bank, exporter bank, then exporter bank usually what we call it discount, right? So you will get the payment for that amount which is due on 25th May, the 25th September, because issuing bank has already given acceptance, right? So nominated bank would feel more comfortable that boss, at any cost we are going to get the payment on 25th December. If my customer requires right now fund, so they will try to earn something, right? So they will take the discount charges from today till due date 25th September, right? So that amount which you will get will not be considered as working capital. This will be out of working capital. So if you have got, for example, 5 crore cash credit limit with your bank has forwarded amounting $50,000. Due date is 25th September. Acceptance has come. Your bank can discount it, will give you the money. That money which you will receive, equivalent amount of $50,000, will not be part of your working capital 5 crore. That will be out of that working capital, above the working capital, right? So that is what we need to ensure. Okay. Bank will not use the your line to block before giving that money. So it enhances the uh, exporter's ability to obtain bank financing for the transaction. Many of the time, maybe as an exporter, you would have got pre-shipment credit sanction. So once you submit the export LC, you will be entitled to receive the pre-shipment advance from the bank. And once you do the shipment, you can submit the document to the very same bank that they will convert pre-shipment into post-shipment by discounting the bills under LC, right? And obviously, once LC you have received means you can reach out to new customer. How this is possible? It is possible that maybe you are exploring new market and you are asking for, boss, I need to mitigate my default risk, payment risk. You are asking advance payment, but you are not getting. Maybe you can start relationship by under LC. Okay. So establishing a new business connection is not easy, especially cross-border business. So it is difficult to find a new buyer who is ready to make the advance payment. Okay. Because for him, you will be entirely new. So he will not have trust on you, like you do not have trust on the buyer, right? So by accepting LC as a method of payment, the exporter can increase the chance of securing the order, right? What is the benefit of applicant? Obviously, it gives the access to the seller as a source of supply without advance payment. So if applicant buyer gives LC means he will be able to do business with any seller. Seller will not consider what is the credit worthiness of the importer. Whether importer will be able to make the payment or not, seller is least bothered. So LC give an opportunity for the importer that he can start a relationship with any of the seller. So buyer is assured that he has to make the payment only when goods have been shipped and documents have been received by his own bank. Then only he has to make the payment, not like advance payment. There is a more risk, right? LC permits the buyer, if buyer takes the appropriate steps to protect itself from paying against defective goods. How? By stipulation of an external agency inspection certificate under LC. So if buyer thinks that, boss, I need to uh, ensure that quality remains the same, goods quality. So what buyer can stipulate in the LC that inspection certificate from a third party, good reputed one, can be stipulated in the LC, then seller, exporter will not have any choice but to have the inspection done by that particular agency and submit the report under LC. That way, buyer can mitigate this risk also. So more favorable payment terms. So maybe buyer requires certain amount of credit. Maybe exporter is not willing to give. So buyer can negotiate more favorable trade term with the exporter when offering payment via LC. So if LC exporter is getting, maybe exporter would say that side payment, we are okay. But if maybe importer wants 90 days credit, maybe exporter may agree for that also, because Exporter knows that once acceptance message will come, his own bank will discount and he will get the payment. So that is also quite possible that uh, exporter may agree that, okay, fine, if liquidity issue is there at the importer end, because ultimately both need to do the business. Exporter need to ensure that he should be able to push his own sale. But what about the importer? You need to accommodate importers' requirement also, but obviously to take care of the risk of yours also. Okay. So maybe after 90 days due date, applicant need to make the payment to issuing bank. Timely shipment. So if LC is to place that boss shipment need to be done by 15th August, you do not have any choice as an exporter, right? So that way buyer can definitely, put stipulation in the LC that I want these goods to be shipped latest by 15th August, right? So if you do the shipment after 15th August, it will be a case of discrepancies, and maybe you have to bear the discrepancy charges, or in worst case scenario, your payment will get delayed if buyer does not accept the discrepancies, or worst case scenario, you will not get the payment at all. Okay. But is everything rosy? You do not have any risk as far as LC is concerned. You have got the risk. Exporter has got the risk. Failure to comply with the terms and condition of the LC. That is the biggest risk any exporter as a beneficiary of the LC carries. Remember, we have already discussed that LC is a conditional undertaking, right? What is the condition? That issuing bank will honor only when we are able to submit documents according to LC terms and condition. And unfortunately, I can tell you that in most of the cases, when you present the document, it will not be a complying one. Definitely, bank would try to raise the discrepancies. So very difficult to comply with the terms and condition of the LC. If documents are discrepant, means our payment is not assured. We need to be dependent on the applicant to waive the discrepancies. We have to bear the discrepancy fee also. Many of the time, amount will be reduced and payment will be get delayed, right? So that is the risk we face. Worst case scenario, obviously, documents will be returned, goods are already reached in the importing country, and we are stuck now. What to do? There is no meaning of such LCs when we are not able to present documents which are complying one. The next is basically failure or delays in settlement from the issuing bank. So this shows the, you can say, standing of the issuing bank. So I was giving the example that bank A, which has not got good reputation, and that LC is not basically confirmed LC. So you have sent the document, okay, but that bank may take their own time, despite it is under LCI. You know that nearby country, Bangladesh, lot many issues are there. Even if it is a site LC, you will not get payment on time. Even if it is due date, they have already advised that we will make you the payment on 25th September. Payment will get delayed. Okay. So there could be possibility like that. That risk also we face. So always have a look. Who is the issuing bank? What is the credit standing of the issuing bank? And what is the country where that issuing bank is located? The next is LC issued by an entity other than a bank. And this is the biggest risk. Okay, this is the biggest risk. All of these risks to a beneficiary may increase if the issuer of the LC is not a bank. We have discussed that. Non-banking entity also may issue LC, which is subject to UCP 600. So if a beneficiary has any doubt as to the status of the issuer of the LC, or it is clearly issued by a non-banking entity who is not the bank, then as a beneficiary, you should exercise caution before doing the shipment and placing a reliance on the issuer of the LC. And if you have got any doubt, what you can do, you can approach your bank, because in India, many, you can say, lot of agents are there, or you can say many of the customers, exporters have got this type of LC. So need to be careful. I will discuss this in detail. I will take 5 minutes later on before we close the session to discuss this aspect. So I have kept that part in last. Okay, so we will discuss this part. What are the precautions you need to take when you receive LC, which is not issued by a bank? Okay. So foreign exchange loss, this is very simple, that today if rupee is how much? It is 86.25, for example. Okay. So at the time of placing the order, rupee is 86.25. But when you receive the You have placed the order for 10,000. You manufacture the goods. You do the shipment. Once payment is received under LC, at that time maybe it is not 86.25, it is 85.25. Adversely moved, so loss will be there. And worst case scenario could be fraud. Now you have received the LC from courier, right? How will you verify that LC is genuine? There is a risk that LC itself may be fraudulently issued. This might induce a beneficiary to ship goods. You have done the shipment based on the whatever paper you had received under LC. When you approach the bank after doing the shipment, all set of documents you have prepared, you have submitted to your bank. Boss, take this document which is against this LC, right? At that time, you will find that your bank will tell you that LC does not exist. LC does not exist. So how to do that? Or maybe that bank has not issued that LC. That is also a challenge. Either that bank does not exist who has issued the LC, or maybe that bank exists, but that bank has not issued the LC. Means this LC is fraud. Now you have already done the shipment. What to do now? So that risk is there. Okay. And accordingly, the risk for the, you can say that buyer also is there. We have already discussed, so there is no need to again repeat this. Non-delivery of goods as described in the presented document. So there could be quality, quantity issue could be there in the goods. Short shipment or shipment of inferior goods, that is the risk. Banks deal only with the documents, not with the goods. Bank will say like that. What to do now? Goods are not as per the sales contract. Goods received by the applicant prior to documents being received by the issuing bank. In case of short sea journey, for example, if goods are being shipped from Chennai to Colombo, Sri Lanka, how much time it will take? Maximum maybe 10-15 days time. Okay, goods have reached to importing country. Now documents, first CHF agent need to give documents to you. Beneficiary need to collect certificate of origin, packing list, maybe inspection certificate, maybe insurance certificate also. Those things will take time. 20 days time you have taken, you have submitted the document to the bank. Bank will take another 5 days, nominated bank, they will courier it to the issuing bank. Issuing bank will take another 5 days time. Maybe they can take it. So already goods have arrived. And that CHF agent of the importer or maybe port authority would say to the applicant, take the delivery of the goods, otherwise demurrage will start. Now the challenge is how to take the delivery of the goods from the carrier. Carrier would say, where is the original bill of lading? Submit the original bill of lading, then only I will release the goods. Now, what is the choice available with the applicant? One side, goods have already arrived. He has been informed, if you don't take delivery within 3 days, demurrage will start. But where is the document under LC? It is in transit because issuing bank has not received the document. What to do now? Maybe in that case, importer need to request his bank for issuance of shipping guarantee in favor of the carrier, so that carrier, without even surrender of original bill of lading, may release the goods based on the shipping guarantee. But once importer will request the issuing bank to issue shipping guarantee, what issuing bank will do? Issuing bank will ask, give me the one undertaking. What undertaking? Counter indemnity. What indemnity would say? In that, applicant need to clearly mention that they will accept the document even if documents are discrepant in future. So whatever will be the status of the documents, they need to accept it, and they will need to write clearly that issuing bank is authorized to debit our account. That means issuing bank will simply debit once documents are received. So those things are there. That is the risk for the buyer. Loss or damage to goods in transit, that is also risk for the buyer. Foreign exchange risk. So today maybe, for example, Indian importer. Today, if you go and issue the LC, rate is, for example, 86.25. That is the, you can say, notional rate. If bank takes, they will convert the US dollar, $10,000, multiply by this amount, and they will create the contingent liability. But maybe you need to make the payment after 1 month. At that time, rupee moves adversely for you. Means now dollar, instead of 86, it is 87.25. One rupee difference is here. So that risk you need to bear. Obviously, you can do the hedging and all those things for that. Failure of the issuing bank, that is the worst thing can be there. That this applicant importer bank is no longer working, means it is insolvent. Okay, then what to do? Seller will say that, boss, I have not got any payment under LC because your bank who has issued the LC has gone insolvent, so I will not get the payment under LC, right? But if you have taken the goods, correct, so you need to make me the payment. If goods are so critical for the applicant, then what to do? Maybe importer would try to compensate exporter, and maybe importer has already deposited the money with the issuing bank. He will not be able to withdraw because that bank has become insolvent. So those risks are there for the importer, right? Fraud in the presented documents. So this is another issue. Maybe actual shipment has not been done, only fraudulent documents have been presented, and bank would say that we are not responsible for the authenticity or genuineness of the LC, right? So documents were as per LC, exporter has done fraud, documents are presented without doing the shipment. What to do? They have been honored, documents are complied. So that risk is there with the importer, because banks deal only with the documents, not with the goods, right? So now quickly we can see within next 5 minutes, so we can see what are the critical mistake as an exporter basically can do, doing business with an importer without properly knowing him. So this part I wanted to cover here, that it is very important that we need to have a due diligence on the buyer. Okay, this is critical. Business is not a virtual thing, right? So an exporter need to have a real knowledge about his counterpart. That is what is this is my view before doing the shipment, before starting any relationship, right? So as an exporter, you try to finish a transaction without having a decent information about buyer, then you are simply trusting on the applicant, right? Buyer. So LC does not protect you against any immoral buyer. So always integrity of the buyer is critical. So always you need to have few of the question. Did I find this customer from any, you can say, trade exhibition or customer visit? Okay, and you have started relying on them. Or does my customer have any proven, you can say, business relationship in my sector? You have checked with your local other business associate whether they have done the transaction with that customer or not. Does your customer visit you before the business was initiated? Like that, you need to have complete understanding about the buyer. Okay, so do your thorough due diligence on the buyer, even if you are getting LC. Okay, lucrative business offer which are too good to be true. So you want to do the sale, right? So export sale, you want to explore new market, new buyer. Understand that when you float your requirement, maybe you will be approached over net. So many lucrative offer could be there, and you will be wondering that you are the only person who has got by luck that particular order. So good quantity with good pricing, nobody is aware, only you are aware. If this sounds good, then need to be careful, right? Need to be careful. Understanding the risk factors associated with your transaction. This is very important, because always I believe that you definitely need to do the export business, but you also need to mitigate the risk. Okay, so when you do any of the transaction, this payment terms basically is meant for that also, right? So you mitigate the risk when you go for advance payment. So you 100% mitigate the risk. You have already got the you can say payment in advance, then only you do the shipment, right? And especially LC, you understand the mechanism properly. That is also a challenge. If you are not able to understand the LC transactions, then maybe you will not be able to present the documents as required by the LC terms and condition. Okay, so you can say lack of knowledge about the entire transaction. So we need to understand when we deal with the LC, it is not only the case that we have received the LC, but we should be, I mean, I'm not saying that you need to become an expert, okay, but you should be able to understand the critical component of the LC, right? So what the precaution you need to take? Check the terms and conditions of the LC properly. I have already discussed. If you observe any of the terms and conditions you are not able to fulfill, ask for the amendment before doing the shipment, because once shipment is done, you will not have any choice. How if buyer does not cooperate, then what will you do? Okay, you will be at the mercy of the applicant, right? Verify the LC is genuine or not. How do you verify? How will you verify? Ask your bank that this is the LC I have received, get it verified. Simple one. No need to worry about that. Check the credit worthiness of the issuing bank. Who can tell you? Your bank can tell whether bank A who has issued the LC is really worthy or not. Check the country specific risk of the issuing bank. This also will be told to you by your bank, right? Ask them. Check who is the actual issuer of the LC. Now, if you are able to find absolutely okay that boss, whoever has issued the LC is not a bank, then you need to be more than extra careful. But if you are not able to detect, fine, ask your bank. They will be able to tell you that who has issued the LC, right? By taking these precautions before shipment of goods under LC, exporter can mitigate various risks and ensure successful international trade transactions, right? How to avoid discrepancies under LC. This is also few of the things I wanted to discuss here. Pre-documentation stage. We need to have understanding about two critical International Chamber of Commerce publication. One is the UCP 600 and another is the ISBP, International Standard Banking Practice. So whoever is dealing with the LC, my recommendation would be that please go through these two ICC publication that will give you enough idea about operation of the LC, because bank also refer the same thing. So if you are aware about this, nothing like that, okay, that will help you. And discuss details about required documents under LC with the applicant. Before you go for LC, discuss what are the things you want to be captured in the LC with the applicant, so that applicant and you both can capture those things in sales contract, and from sales contract applicant can fill up the LC application form, and ultimately LC should have the same terms and condition, right? So it is the beneficiary who is solely responsible for submission of compliant presentation, because you need to ensure that you must get the payment under LC, and for that we must be able to submit documents according to terms and conditions of the LC, isn't it? Better to ask for the draft LC at the beginning, if possible, and get it vetted with your team or your bankers. If any of the terms and condition in the draft LC means before they actually issue the LC, you can get the draft copy of the LC. LC is yet to be issued. That will help. If you say that, boss, this line to be deleted, this terms and condition is not acceptable, there will be no requirement of amendment, because original LC, when it will be transmitted, will not have those things if applicant also agrees to your objection, right? So it is better. Once you receive the LC, I have already told that you need to go through each and every word of the LC, that nothing is against you. You should be able to comply with the terms and condition of the LC. If you observe you are not, then ask for the amendment before you do the shipment of the goods, right? And any ambiguity you observe, what is the meaning of this word? Better to ask. Better to ask, what is the meaning of this? Later on, issuing bank will say that this was the meaning and you will interpret differently, then that will be the case of discrepancies, okay? So this way, you can definitely avoid many of the complications. And obviously, document preparation stage is the critical one, okay? So complete all the documents as per LC requirements. If 5 documents have been asked, all 5 documents you need to present as per LC terms only, okay? Obviously, you need to have not very in-depth understanding, but if you have general understanding about UCP as well as ISBP, that is good. While you do the preparation, see that all the signatures and other things are authenticated, signed as per LC requirement, and present all documents. If 5 documents have been asked, it has been asked 3 original, then 3 originals only need to be presented, right? Like that, you need to take care. Fine. Present correct number of originals. And date on documents, always you need to be careful that you comply with the LC requirement, right? So these are the few things I wanted to discuss, that you can avoid the discrepancies. Now, one thing I have jotted down for all of you, what are the most common discrepancies? Not necessarily these discrepancies you will always commit, but it has been observed here, right? Late shipment. LC latest shipment date is 15th August, or we can take it 15th June, but bill of lading shows date of shipment as 17th June. Discrepancies, right? late presentation. We need to remember that documents need to be presented to the bank within 21 calendar days after the date of shipment. If date of shipment is 1st June, documents must be submitted on or before 22nd June. Though LC expiry date is 30th June, it doesn't matter. Okay, but definitely LC documents cannot be presented after the LC expiry date. But one more thing we need to understand, documents must be presented within 21 calendar days after the date of shipment. LC expired, we have submitted the document only after expiry of the document, LC, right? LC no more in existence. These are common things. I mean, not intentionally we do it, right? It happens. Few of the things will not be in our hand. We have your carrier or CHF agent has already taken the goods, but shipped on board is yet to taken place. Bill of lading has not been received. Date is given that you are telling the guy that boss, latest shipment date is 30th June, but for any reason that guy is not able to do the shipment before that. So those things are genuine problem. Missing documents. Document were asked inspection certificate, but it didn't. We were able to present. Conflict of data. Bill of lading shows quantity 1000, invoice shows 800. So conflict is there. Okay. Incorrect data. Insurance certificate has been asked 110%. Cover need to be there, but cover is only up to 105%. Discrepancies, right? Goods description not as per LC. So whatever goods description is mentioned in the LC is not captured properly in the invoice. So these things are very common discrepancies, right? Carrier not defined on the bill of lading. UCP says carrier need to be named, identified. Bill of lading does not indicate that. Okay, signing part of the bill of lading, for example, unauthenticated alteration. So alteration has been observed, but it was not. Correction alteration is there, but not authenticated. So bill of lading, some correction was there, not authenticated. Missing or incorrect endorsement. Endorsement need to be there. Did not happen. Port uploading. It says that Port Nhava Sheva going to Durban port, but instead of Port Nhava Sheva, Kandla port is mentioned. Discrepancies. Okay. Insurance document dated later than the date of shipment. So date of shipment is 15 June. Insurance document is 17 June. Discrepancies. Unless cover is effective at least from the date of shipment. So these are very common discrepancies, right? On-board notation is not there on the bill of lading. These are the common things. Lot many other discrepancies could be there, but I have jotted down few of the discrepancies. Okay. Partial shipment not allowed in the LC, but we observe that partial shipment has taken place, or transshipment, unloading from one vessel relating to another vessel has taken place between port of loading to port of discharge. So these are the most common discrepancies, right? So what the options available to us if we find documents are discrepant? Do we have any option? If time permits, what we can do, we can request nominated bank to return the document. You can do the correction and present the document if time permits, right? The next that, if time is not there, documents are discrepant, nominated bank where you have presented the document has found the discrepancies. What you can do, you can request nominated bank to send a swift message to issuing bank mentioning all the discrepancies, right? So post receipt of swift confirmation, nominated bank may negotiate the document and pay to the beneficiary. That could be another way. Or beneficiary may request the nominated bank to dispatch the documents to the issuing bank with a request to waive the discrepancies and to honor the presentation. Remember, when documents are being sent like this, documents should not be forwarded to the issuing bank on collection basis. That word should not be there. On collection basis, word should not be there. Okay. Post receipt of acceptance of discrepancies from the issuing bank, nominated bank may negotiate the document and pay you. Okay. These all are I'm discussing when it is a case of discrepant documents. So I can tell you that 70% and above time when you will present the document, bank will raise the discrepancies, right? So if beneficiary is having working capital facility with the nominated bank, what you can request your bank that they may negotiate the document with recourse to the beneficiary under the bank's credit line. Means whatever limit has been sanctioned, they can use that working capital limit and discount and forward the documents to the issuing bank. Once they accept, they can shift the line. Your credit line can be, you can say that they can change they can take the exposure not on you, but on the bank's line once acceptance is received. Okay. So in case the applicant does not accept the discrepancies and issuing bank decides to reject the presentation, beneficiary who is still having the title of goods may arrange for the return of goods at his own cost or find another overseas buyer to dispose of the goods. In both the cases, we need to remember that beneficiary will incur heavy loss. Okay. It is very difficult to call back the entire goods which are lying in the importing country. Okay. So it would be better for the beneficiary and the applicant can sort out this issue among themselves despite involvement of banks in LC transaction. So best thing I can suggest you that you can talk to your applicant, get the issue resolved so that beneficiary can go to his bank saying that we are okay with all the discrepancies. Once applicant says this, we are comfortable, we are okay, we agree to accept the discrepancies. Usually, most of the time, 99% time, issuing bank will also agree to accept the discrepant document. So applicant may accept the discrepancies and issuing bank may also agree to the same and beneficiary can get the payment. So these are the few of the options I have jotted down. Okay. Now I was talking within 5 minutes, I will wrap up the entire thing. At the beginning, I had told you that I will want to discuss a few of the things when LC is not issued by a bank. So here is the slide for that. LC issued by non-bank through MT 710. This is the SWIFT message type, right? Precaution for exporter. Okay. So Indian exporters, while dealing in non-bank LCs, have incurred heavy transaction charges and in some cases have also incurred total loss for export. This is the from where I have taken this, right? Incidences, buyers either defaulted or just disappeared, leaving the exporters to realize later that the LC issuing entity is a non-banking entity, is not creditworthy, right? So MSME and SME clients lack required expertise to understand and appreciate the risk involved while dealing with LCs issued or advised through non-banking entities. It was found that exporters, beneficiaries on receipt of LC, too eager to capture the business, ship the goods without exercising basic precautions like checking the bona fides, doing basic KYC checks on the buyer, signing a formal contract for the sale of goods. In some cases, there was no formal query or communication from the buyer, and only on the basis of the LCs issued by non-banking entity, beneficiary exporter executed the export order. Unlike India, in many countries, LC can be issued subject to UCP 600 by a non-bank. That, however, does not mean that it is prudent for a beneficiary to accept such LC. So in this regard, FEDI, what FEDI is an organization, means FEDI means Foreign Exchange Dealers Association of India, and ICC India means International Chamber of Commerce India, right? Both have listed some checkpoints that exporters are encouraged to follow while dealing with new clients, especially for LCs issued or advised by non-bank entities. So whatever I have taken in this particular slide, courtesy ICC India website, you can Google it, you can get International Chamber of Commerce India. If you simply type ICC, then it will give you International Cricket. Okay, so better to type, Google it, International Chamber of Commerce India, and you will get it, this one. This PDF is there, so I have downloaded from there. You can also download. What is mentioned there? Quickly we can see. Checklist. Suggestion to the beneficiaries means exporter to safeguard their risk. Few of the checklists are given, right? Identify clearly which entity has issued this LC, whether the issuing entity is a bank or a non-banking entity. This will be stated in field number 52A, issuing bank, right? You can go through it. Check the financial status of the issuing entity, LC issuing entity, with your bank before processing the export order. So better to ask your own bank about the LC, right? Who has issued the LC? In some of the transactions, your buyer is in a different country, okay? And this LC issuing entity is in another country. For example, your buyer, applicant of the LC, may be in UAE. This issuing entity may be in Zambia or Ukraine. Now understand, you are based in India. Applicant, buyer is based in UAE, but LC is being issued by where? From Zambia or Ukraine. Usual case would be LC issuing bank will be located in the country of the importer only. But what is the scenario here? But maybe we are okay with this. We think that, boss, LC is LC. We have got the LC. We are okay with this, even if this situation is there. Check the commercial and financial status of the buyer importer. Check for reasons why any of the banks in the importer's country could not undertake its payment obligation. Just think once why no bank had issued this LC located in the importer's country. Why other country bank has got involved in this transaction? Why not importer's country bank has issued this LC? Please read all the terms and conditions of the LC before processing the order. This is the PDF file, it is there. Further, it says at times the first advising bank which has transmitted the LC might have added its confirmation. This can be checked by reading field number 40A. Detail has been given, right? So I have jotted down all those things as it is verbatim for your benefit, because many of the time I have observed that many time you will not get the time to just go and search for this type of PDF. So I have just copy pasted here. Okay. Irrevocable adding confirmation. In this case, field number 49 may state without. It means that first advising bank had already confirmed the LC, and the second advising bank in India may advise the LC without confirmation. So this could be by my own country's bank, but that is not the case. LC is so two advising banks are there. First advising bank has added the confirmation. Second advising bank, which is in your country, our country, has simply advised the LC, not added the confirmation. So you should not rely with the word confirmation, because confirmation has been added by the first advising bank, not second advising bank who is based in our country, right? First advising bank, which is incidentally the confirming bank, should be financially sound. We suggest you seek assistance of your bank for this purpose if you do not possess the ability to verify financial soundness of the first advising bank. Please read field number 47A, that is additional condition. Details of dispatching of documents may be stated there. Okay. Successful completion of your transaction depends on your alertness in checking the financial background of the buyer and the LC issuing entity's financial status. So this is what FIDI and ICC India both have clear-cut mentioned in this guideline. Okay, so this source I have mentioned here. Okay, so it is source and courtesy I have taken from ICC India site. I must say that this guidance note is dated 30th November 2021, is issued without any risk and responsibility either of ICC India or of FIDI, and is solely intended to be a guidance document for the exporter, encouraging them to exercise basic due diligence and adopt appropriate precautions whenever they receive letters of credit LC issued by non-banking entities and the exporters proposes to enter into any sale contract supplying goods against future payment, initiate an export transaction against such LCs or avail of finance against such LC if any. Okay, so you can also get it. Okay, so with this I am done with today's two payment terms. That is first is advance payment and second is LC.